My name is Joe Tazzola. I'm one of the analysts, and I'm going to be walking you through the new matrix modeler tool. We're going to go to models and products and custom models. Here we're going to have all the custom models that you've made. And, we're just going to walk through how to use the tool. So we'll just create a new model. Now, I'm just going to name mine, test for matrix model webinar. And make sure you click on the matrix so it's set to matrix. First, it's going to ask you to select a matrix type to begin. Today, we're just going to stick with the system matrices just to make it a little bit easier to get used to how to use the tool. Further along, we'll get into custom matrices and things like that. Now, if you are going to try to use a custom matrix going forward for this, be aware that we only are going to be using daily run matrices. So if you do already have a matrix that you like to look at and you want to be able to put into this tool, be sure you update it. You can do that from the matrix homepage and click edit next to the matrix and say run frequency, change it to daily, and then make sure you save that. Once you do that, we'll be able to create the matrix history on the site. It may take a little while, but you can't just create a matrix today and then have it run all the way back immediately. We have to create all of that matrix history for you. That being said, we're just going to do a system matrix to get our feet wet here. And we have some popular pre-mades, and we have, asset class, the DWA group matrix, the Dow Jones, the Nasdaq total return matrix, the Nasdaq total return with money market, OEX, a few of those there. Just for example's sake, we're going to go with the Nasdaq 100 total return with money market included. Now, once you select the matrix that you want to run, you're going to get all of the potential model holdings here. And if you want to eliminate one for whatever reason, we can do that by clicking here, and this will eliminate it from being potentially held in the model. Say Tesla's too much for your clients, and you don't want it included. You could uncheck it here, and then there won't be a model holding throughout the backtest. But we're going to keep all of them selected for now. Now, this is a great way to maybe say you want some satellite exposure, some individual stock exposure. It's not going to take up your whole portfolio. Maybe just 5 to 10% of the allocation, and just have try to find some winners with the matrix. So it's gonna ask you first to ask the target number of model holdings. Now you can change this to whatever you want. Let's try 5 here. Now the next step is going to be by criteria. So we can either do rank based, which is what we usually think of when we look at a matrix is, which one has the most buy signals. That's 1, 2, 3, 4, or we can say percentile based. So this way it's going to only want to hold the top 10%. For this example, we're just going to stick with rank based. And we can say on evaluation, we only want to purchase securities that are ranked at or above. So, you're going to want to go with how many target model or target number of model holdings you have. So we'll go 5 to match it. Now, when we get further in, we'll see why we may want to expand this to 10 or 15 or what have you. But for now, we're just going to stick with 5 to just match our target number of model holdings. Sell criteria. So this is when we're going to stick with rank-based again. So on evaluation, we're only going to sell positions ranked at or below. So say something's a model holding and you want to give it some room to run. For this purpose, we're dealing with the NDX, which is a somewhat volatile universe. So we're going to stick it to the top 25. If it drops at or below 25, we're going to move out of that position and buy the next highest ranking stock in the universe. Now you can expand it to go even lower. Say you have to make it drop to 50. But given the universe that we're using right now and the volatility associated with it, we're just going to stick to 25 to keep a short leash on some of the names. Next, we can select an evaluation frequency. We can go daily, weekly, monthly, quarterly, semi-annual, or annual. For our purposes, we're going to stick with monthly, which is what a lot of our matrix models run on, is monthly. You can either choose a custom day if you want to. Say for some reason you want the 15th. You can do that. We're just going to stick with last trading day to make it easy on ourselves. After this, we have some advanced options here. So we can change the ranking methodology from buy rank to X rank, which instead of looking at this relative strength signals, we're going to look at the relative strength column, or we can do the total rank, which is when we add the buy and the X ranks together. Most of our matrix models run on just the buy rank, so we're going to stick with the buy rank for today. Next is the rebalance or replace. And we want to select the when this occurs, when the rebalance occurs. Now you can make it monthly, or you can make it only when a trade occurs. For this universe, in individual stocks, you typically want to let the winners run a little bit. So I'm going to say, on a trade only, are we going to rebalance the portfolio? Given we're only using 5 holdings here, that means each is weighted 20% typically. We're going to give this drift tolerance a little bit more leeway, move it up to 10%. So say, Zoom were to get above 30% as one of the holdings on evaluation, regardless of a trade or not, we would rebalance the portfolio if it were to breach that collar. I got a question. Ranking methodology, which is the fastest? So the fastest is going to be this X rank. That is the column on the relative strength chart, so you don't have to produce a signal. Buy rank is, counting up the number of buy signals versus the rest of the universe. So if you want something that's a little more quick, that X rank is going to be what you're looking for. Typically, though, that's going to create a large amount of turnover for you, and it could get you out of good trades, quick. So typically we suggest using the buy rank. If you want to mix the two together, that's what the total rank is for. You're getting some shorter term and some longer term. So the sweep down indicator, since we have money market in this universe, we can say, hey, if the market's really falling apart, and it gets high enough in the matrix, I just want to hold money market. I just want to get out. For this universe, it does move around quite a bit. So we'll say if the money market gets above, if it gets in the top quarter of the matrix, we're just going to say, okay, let's just move the cash if something bad is going on right now. And swept to security, this is what we're going to sweep down to. So since our indicator is money market, we're just going to continue to use money market. At any given time, what is the max position percentage you want per holding in your model? So if it, say you were to set this to only 20, then, this drift, wouldn't really be meaningful. Also, you'd only be able to go max money market to 20% if, something were to happen. So we're just going to leave this at 100% for now. Once you've selected, you want 5 holdings, you want to hold it until it falls out of the, the top quarter of the matrix. You got your evaluation frequency at the end of the month. You have your ranking methodology as a buy rank. You're rebalancing only on trades. I got another question. Will it only check money market monthly? Yes. So it'll check on that evaluation frequency date, which is the last trading day of the month. So we're pretty much set on this page for now. So we're going to move on here. Now, here is where, we said we only want to hold 5 securities, but there's a potential, the top 10 are potential holdings. This is when we can sort it by, so you're looking at a yield portfolio and, you have 10, you're only looking to hold 5 stocks, but you're looking at the top 10 and you want to hold the ones with the highest dividend yield. You can do that. You can do technical attribute or score, or volatility. And you can change this from least to greatest. Since we don't have 3 years of data here for the volatility for Zoom, that's why that had a little hiccup there. But, we can sort it by dividend yield. You can see, Qualcomm goes to the top, even though it's ranked 5th. Since it's, available as a model holding, we're going to switch up the rankings by dividend yield. That's more useful for, say, you were looking at an S&P 500, matrix or something with, where you actually have a lot of securities using yield. In this case, we're looking at the NDX, which a lot of them offer low or no yields. Now we can click on next here. So it'll tell you what the model start date is. We can get it all the way back to 93. The starting cash, you can do 100 or 10,000. It's arbitrary. You can change the benchmark here. So since we're looking at the Nasdaq 100, we might as well use that as our benchmark here. And you can insert a theoretical annualized advisory fee. For now, we're not gonna mess with it. We can create preview. So this may take a minute or 2 to load, but we're going to get a rough back test. It's a monthly back test of the portfolio to see what it looks like before we want to save it on the system. Now that everybody's following along, we got 1 out of 6, so it might take a while for everybody's to load. Okay, Chris asked, how do we get other indices or portfolios of stocks or ETFs in this? So what you're going to want to do is you're going to have to create your own matrix. When you want to do a custom matrix, you have to create your own matrix with those securities that you want. Then you have to make sure that it updates daily. When it says run, it'll say frequency. You're going to set that to daily and make sure, then you can save it. Once you save it and try to add it, we'll get the historical back test for you going and create the data so you can plug it in here and see how the model would run. So the first step would to be, say you had your own universe of, ETFs that you wanted to use. You make sure you, throw that in a portfolio, send it to a matrix, save the matrix as a daily run matrix, and then you can be able to use it in here. So, now we have the back test ready to go here. We can see it does pretty well. We can see our risk characteristics here, correlation to the benchmark, max 6 months drawdown. We get, 1, 3, 5, 10-year annualized returns year to date. The compound annual growth rate, which is, the yearly annualized return. Standard deviation, Sharpe ratio, RRIS, which is relative to this benchmark, the NDX. And then if you scroll down, we can see a history of the trades here. What went in, what went out. We can go up to recently to see what it did. In August, added Apple, got rid of Dexcom, and then in September, it added Zoom and got rid of MELI. And then if you scroll down here, we can see, the annual return versus the benchmark return and the excess return here. You get this rough period here in 2000 through 2002, which was just a rough time for tech in general. But you're able to stay afloat. 2001 was a rough year. But, you're continually on average beating the benchmark with this, and you're only holding, you have 5 holdings. And we can see, if you want to do Control F, you can search the historical holdings to see when money market went in. We can see it went in 2001 here. Then it went out a month later. 2008, it went in, went out a month later. Again, in 2008, went in and then went out later. So, this is, going to say, okay, well, this is something I'm interested in. I'd like to save it. You can click Save here. Say you want to change something and test something different. You'll click on Exit Preview. And, say we went back and then say, buy criteria. We can purchase securities. It'll default to the top 5, but we can say, look, the top 10 is acceptable. And Corey, I'm going to get to your question here. Just, let me get through this. He was asking, what was the last feature, ranked by dividend yield, et cetera. So this is when this buy criteria details comes in handy. So, it's going to default to, holding the top 5 securities here, but it can buy, the top 10 here. So if we were to click next here, we can see the holdings would be Align, Zoom, NVIDIA, JD, and Qualcomm. Now, say you only want the lowest volatility out of those top 10 names. It'll do that. So now, what we would have been holding completely changes. We have IDEX, Corpart, Apple, Cintas, and JD. Although, they're not the highest buy ranked, we have them as acceptable holdings since they're in the top 10, and we decided to rank it, we want the least volatile names in here. So, and you can change this from greatest to, least if you wanted to. Obviously that's going to, things are going to move around a lot more. For our purposes, we're going to go least to greatest. Click next here. And then we can create this preview again. Hopefully it doesn't take as long this time. But that's one of the, the unique features here. So, we know, your job typically isn't to, have stuff that goes crazy. You want something secure for your clients. Since, we don't have volatility data going back as far, we won't be able to create a huge back test here. And the model underperformed. Now, that was just kind of an example of how you could use that feature if you wanted to. We can also sort it by TA score. So say you don't want a 4 for 5, all those, these are all 5 for 5s except Corpart. But, say a 4 for 5er were to find its way in here among all these 5 for 5ers, even if it was, number 2, it'd be kicked out. Now, once you save this model, you'll be able to view it on the models page. I did that already, so we didn't have to go through waiting to save it. So if you want to click here, you can look at the backtested performance. You can see the current holdings. You can get an idea of yearly returns like we did on that preview. You can also download it to a CSV if you like. You can see the trade history. The entire universe, which, is the NDX 100 with money market. Some advanced statistics here, performance, R risk, all these, more in-depth risk measures. And then you can set an alert on the model. So when this model does update or make a trade, you will be notified when that happens. All you have to do is just click that bell icon right there. Can you show me this? So Barry asked, can you show me with this model what happened in February through March? So yeah, so I have a model similar to the one we just did saved here. It's NDX Matrix 5 holding. We can look at returns here, and we can get a monthly breakdown. So February, you were down 70 bips. Well, the benchmark was down, roughly 6%. March, you're down about 7%. Benchmark's down 7.5%. So you can see the returns, the backtested returns through different periods in time. So Chris, he was asking if you send if you create a custom matrix. So when you say you have a list of securities in portfolios that you want to use, you would create a matrix using those securities. Make sure it runs daily, and it's going to take us a couple of days. We have to create all of that backtest matrix data on the system. Once we do that, you can create a custom matrix model with that matrix. So you're not going to do it immediately right away. So I have a few other questions. When will the recording of this webinar be available? We should, it'll be available in a couple of days at the latest. And Tom also, we'll send this matrix webinar out. Paul asked if it went to money market in 2000. I believe it did partially go to money market in 2000. And it also depends on where you place money market in the matrix. I had mine relatively high for this sort of model. In 2000, Paul, it did go to money market. Okay, so let's get back on track here. Now we've messed around with using this as a stock selection type tool for the matrix. Another way you can use this is to get an idea of what sectors are working and what aren't working. So make sure you click on matrix. We're going to go to system matrices again. select the matrix category, popular pre-mades, and we're going to use the DWA group matrix right here. So we have a 40 sectors and subsectors that we want to look at, and we'll want to look at the top 5 here. We can do rank based again, and we'll do 5. And now it shows you, the potential holdings right there. Sell criteria. We're going to go to 20. So if it drops to the bottom half of this matrix, we'll see it move out of that sector. After this, we can select an evaluation frequency. For this case, let's try quarterly, just to mix it up a little bit, do something different. Quarterly option, we'll do calendar rather than custom. We can enter a month and a date, but we'll just do calendar for right now. Rebalance, we'll do on trade only, and we'll move that drift tolerance back up to 10% since we're only looking at 5 holdings. Now, this does have the S&P equal weight in the model here, or in the matrix, excuse me. And that could be a good proxy to say, hey, none of these sectors are really, super outperforming, or the market's pretty strong. So it's going to be tough to find, some dispersion here. So we can use S&P, the S&P equal weight as our sweep down indicator. We'll say, if it's in the top 10, we'll just default to the equal weight S&P. And we'll change our proxy as well if there's no holdings to S&P equal weight. And we can sort this, we can do dividend, which these are indexes, so there's no dividend associated, but we do have volatility. If you wanted to expand it and only hold the lower volatile groups, we could do that as well. But we're just going to keep it on the default here. And since we have the S&P equal weight, we'll use that as our benchmark in this case. Barry, so the volatility, I think it's just because of the universe, the NDX universe being updated so much. Things are falling out, and some of the names don't have volatility data going past 2019, which is, why that's the case. If you were to use a universe of, stocks that have been around for a lot longer, you should get volatility data going back farther. Okay, so we have this back test here. So pretty much holding the top 5 sectors here with the S&P equal weight as the benchmark, also as a, kind of operating as a money market, as a safety net. And, we see all the returns here. And we can find out when So we actually never got a case of when the S&P equal weight went into this model. So it actually never got to rank above 10 in the model. So, you know, we can exit the preview. We can say, okay, we'll move this down a little bit. We say we can move it to, we can move this up to, let's say, you know, say it's above 15. We'll just take the S&P equal weight. That's kind of a large collar, but so, you know, we expanded, you know, the range it would take for S&P equal weight to be included. It benefited performance here. So we can actually find, we can see in, you know, 2000 here, it went in. And in 2018, it went in. And a reminder, this is updated quarterly, so this isn't going to have as much turnover as that you know 5 holding NDX model we made. Now, say we only wanted groups, you know, with some lower volatility. See how that operates. Excuse me. Remember, we can expand the buy criteria to the top 10 holdings. Click on next here. We'll say, you know, we want the least volatile names. Click on next. And, you know, since we're looking at the lower volatility, you know, we see it drag on performance. So, you know, this is a great way where you can just test different ideas to see, you know, what has worked in the past and what maybe you want, you know, the future kind of returns to look like for your clients. You know, you get some slight outperformance over time. The RRIS did drop, you know, substantially. It was 1.3 and now it's a 1.03. Now that volatility measure could be, you know, great for using for, say, you know, the S&P 500 or a different universe than just indexes. So, you know, we can also run through that. Like you can do the, you know, just a pure OEX matrix. We'll do top 5 with the buy rank as top 10. You know, we'll move this up a little bit because we want to limit the turnover with the low volatility. And also, we're looking at a larger universe here with 100 names in the OEX. We're going to change it back to monthly, last trading day. So we're going to get rid of the swoop down option here. We're just going to let it run. And if there's no viable options, we'll say it's going to default to the S&P equal weight. Okay, and we'll run with this list right here. So yeah, volatility data again with this universe only goes back to 2019. The model still did, you know, better over this period. The R risk was, you know, fairly low, which is what you want. You know, usually momentum strategies are going to be gravitated toward those high volatility names. But, you know, by limiting that, by taking the least volatile names, we've helped mitigate that. So other than that, you know, if there's no other questions here, I'm going to stop the webinar and you all have a great day.